Well, thanks so much for tuning in to this much anticipated earnings call with Amit Chadha of LTTS. The company missed the organic revenue growth mark in Q1, but they have guided to meeting the earlier given guidance of over 10% organic growth and a combined growth of 20%. Now, that is some confidence about the next 3 quarters. They won a very large deal as well. So we'll talk about deal flow, the quarters ahead, and of course, what went in the quarter gone by with Amit Chadha. He joins us right now on the show. Amit, great having you. Thanks for taking the time out.
Thank you so much, Neeraj, for having me on your show today.
The pleasure is ours. Amit, first quarter 1, the miss on the organic numbers, is it a deferment? Is it some other issue? What led to this?
Sure. Thank you. So, Neeraj, if I may, and let me start with the positive and then get to the negative, if that's okay with you. So, year-on-year growth has been 10% in constant currency. In organic terms, it was 7.5%. Our organic sequential was about close to 1%, so 0.6%, like you said. If I dig deeper into that, so transportation for us grew per our model at about 4% and about 15% year-on-year. Medical for us grew almost 1%, and if you remember, the last quarter it had grown well. So that's how medical grows. Industrial came in a little lower than what we had modeled and we had expected. Telecom was a -1%, but I would largely look at that as a swing of Semcon and consumer electronics. Plant is the one that degrew for us. What happened was it's not so a couple of things happened in the quarter, right? Number one, we have seen deferment in decisions in April and May, some part of April and May for sure, and decision making came back actually in the last 2 weeks of June, right? True, right? Number one. Number two, there were some inputs on our current executing projects in plant engineering where the inputs came in late by the customer. So that book of business is not gone anywhere. It's just that in the quarter, we were not able to execute, right? We have actually ramped up additional headcount in Baroda as well as in Chennai. And I do expect that quarter 2 will see us come back strongly in plant and then grow from there, right? Second, transportation and the EV focus that we had put continues. We continue to win deals. One of the total large deals that we won, the total 6 deals that we have won, one of them is actually in transportation. And on the back of what we have done in EV, we've also talking about a couple of others that are in the hopper right now that are upwards of $20 million. And I do hope to close them shortly and be able to execute them, right? So that's transportation for you. In fact, we'll have a longer conversation outside of result season, but we are putting in significant investments in the software-defined vehicle space. I today have about 180, 200 people working in that space. My plan is to take it to about 1,800 people in the next few months, right? And I have the confidence with my tier 1 relationships, with my OEM relationships across the US and Europe that I'll be able to do this, right? Second is the industrial segment, which grew kind of muted, but I do expect that to come back in quarter 2 and beyond because we have one of the large deals is one in that space. Not only that, we are seeing significant new spends coming in digital in select areas of industrial. Now, there are certain areas of industrial and smaller companies that are cutting their spend, putting stuff on pause. That's a reality. But then there is others that continue to spend and continue to roll on as in digital as well as in AI. So some of the AI build out that we will do. And again, AI, we are at about 200 people now. I plan to take it to about 2,000 people in the next few months. And again, that build out will be partly for industrial, right? Third is high tech, right? So high tech, let me talk about it as subsectors. So next gen communication, which is what we acquired with SmartWorld, or came together is the right word with SmartWorld, has actually done well. My clients that were promising us that we will work with you have actually given us work. We've started executing on that. Semcon, however, and consumer electronics is what slowed down a little, and that bleed, I believe, will continue into quarter 2. In fact, 2 of the deals that we have won, one of them is in the media entertainment domain, and the second one that we have won is in consumer electronics. And we believe that this will help us in terms of overshadowing the blues. there is a number of deals sitting out there in the high-tech area around vendor consolidation, spend consolidation, transformation of portfolios, and we are working through them as we speak in the quarter, right? So I'm fairly, maybe next quarter again, because of the Semcon decline, you may have a muted quarter in high-tech, but the rest of high-tech continues to chug along. So don't look at it as one big blob, but look at it as subparts, right? The fourth vertical that we play in is medical. Medical, one of the large deals that we won was actually in medical, and it's for creating a digital platform for one of our customers. And I believe that medical will chug along as we go along, and there is some upside to that to be done. But next quarter, again, it may be that same around what we have done here, but surely there is growth that is happening. We've invested in new SMEs as well as sales teams across Japan, Europe, and the US to try and take this up. And transportation, of course, I do believe will continue to grow as we see it. See, there were three things that we were working on this quarter, Neeraj. One was, of course, bringing Smart World and LTTS together, and I'm happy to share that the integration is complete. One of our very senior leaders is has taken over Next Gen Comms, the combined business portfolio. Again, there's a very senior leader, two senior leaders from Smart World that have taken on responsibility for our two centers. So it's a completely integrated setup that we have done, right? Our goal was twofold, that we hold our margins, right? So if you remember, when we were at about 18.5 for last year, we had said there could be a 200 bips dilution in the first quarter, but we've come in at 17.2. So we've done much better than what we had earlier said, because we have worked through the integration, right? Second, there was some concern around cash flows and DSOs. That again has done well for us because we've been able to integrate, use some of our existing processes, if I may, and our playbook. So I'm fairly comfortable with our solutioning playbook. I'm comfortable with our operations playbook. Yes, the market is tight and we continue to work on that. And I do believe that I'm reiterating a guidance for 20% plus in this year, as well as my aspiration to get to 1.5 billion run rate in FY25.
Yeah, the deal will surely help, right? Cumulatively, $100 million in the quarter gone by. You spoke about maybe $120 million plus, or maybe more in Q2 as well that you're chasing. Is that what gives you this confidence? Because multiple notes that I read this morning, Amit, speak about, because the environment is tough, the ask rate delivery is a bit of suspect in their minds.
So if I may, quarter three, when we ended quarter three last year, that also ask rate for quarter four was high, but we delivered, right? So I do have confidence in the team. I do believe, unless I don't know something sitting here today, I do have confidence that we will get there. See, we are also investing as we speak. Our EV investments are paying off for us. Some of the medical solutions investments are paying off for us. Our digital manufacturing investments are paying off for us. And we have, we've rekitted the hiring engine globally, if I may. And attrition's coming down. So as you know, the attrition came down to 18.9. I see that further coming down. Our confidence is not just on numbers, but at the end of it, I believe that people, clients, and technology is what makes it happen. So I'm happy to share we've been certified as a great place to work in India as well as Poland. It's a new center. It's a big plus for us. India, second time in a row. We've actually rolled out our increments. So variable pay, somebody asked me yesterday, was variable pay paid? Yes, whatever was the calculations was disbursed. We've actually on track to release our increment letters, and some have been rolled out, others being rolled out effective 1st of July to our employees. That was a commitment made to them. And finally, this quarter, actually, we set up a client advisory council. So there's 16 of our clients came together in this advisory council. Together, they are responsible for about $2 trillion of market cap and about $400 billion of revenue. So they came together, and this is an ongoing exercise for us. So they continue to provide us market direction, guidance, and counsel, right? So I do believe that with these three, plus the pipeline, which is stronger and bigger than the same time last quarter and last year, I do have confidence that we will be able to get there.
Okay.
I also want to say that we are hiring more than 750 people net in Q2 in anticipation for the execution that we have to do for the quarter.
Okay. And since I have 2 more minutes with you, maybe we'll quiz you about this, if you happen to miss, say in Q2, let's believe that all goes well and you do even better than what you're promising. Just one final word then, therefore. I mean, this should please the street, the 20% organic plus inorganic. I heard you make a very interesting point about ramping up the AI workforce from 200 to 2000. I presume you meant in FY24. And if that is the case, is there a substantial uptick in AI-driven business as a segment coming up for ER&D companies and you in particular? Or is this complementing some of the other stuff that you're doing? Just wanted to understand that.
So I do believe that AI will have there's an adoption maturity that is available for us right now, and the window is about 24 to 36 months in the areas of manufacturing, communication, automotive, and healthcare, as far as we are concerned. And we are taking a look at therefore the manufacturing, medical, communication, the transport segment, and we are doubling down on that space. We want to get to 2,000 people in AI. Will it be by the end of March? Will it be the end of June? The direction is set. We've actually created a workforce for ourselves and going forward. And not only that, the second one is software-defined vehicles, where again, we've got about 180 people together, creating again accelerators, a lot of work being done. In fact, I'll be happy to showcase some of this at the end of next quarter in terms of what we've been able to do. Like we have signed up with Palo Alto Networks for OT, cybersecurity. I had committed to this that we will try and go an ecosystem play when we bought Smart World last quarter. We announced that deal, the coming together with that. We announced the BSNL one. Our whole goal is to do an ecosystem play. So stay tuned. You will see more of that happening. And we're fairly comfortable and confident where we are right now. But we will continue to be honest, be transparent, be direct as we move forward into the year.
A quick 30-second answer, Amit. Any risks at all to these numbers? I mean, sure, you're confident, but is there any outside risk that you foresee?
Yes. So we did see decisions coming in June, and therefore the deals that we won went into execution. I do believe that I see the deal momentum picking up, but if 1 month is different from another, if it stalls, there is a slight amount of risk that we will see to that. That's a reality in our business. But I do believe that ER&D is bound to grow. I mean, the kind of numbers that we are getting back in terms of what's coming out in reports is that ER&D was at $1.6 trillion of spend last year. And in spite of whatever you heard on the street, it came up at about 1.8 trillion now, and it's slated by 2026 to go to $2.7 trillion, largely driven by digital, largely driven by cyber, AI, SDV, next-gen comms, and digital manufacturing. And I do believe we have the right competencies to be able to address and harness some of this.
Wishing you all the best, Amit. Thank you for taking the time out and speaking to us today.
Thank you so much. Bye-bye.